In this week's episode of the Stock Scores Market Minutes, we're going to take a look at how to find trades. I will also analyze the markets as I always do and discuss some trading opportunities as well as the trade of the week on PTLA. All right, let's get into this week's topic. So how to find trades. When I started trading, I would actually draw out charts by hand, and then eventually there were some pretty archaic by today's standards systems where you could download data and plot charts one at a time. It took probably 5 minutes per chart to do one stock. Of course, nowadays we have all kinds of tools out there, and I'm going to show you the tools that I use for finding position trades. Namely stockscores.com, which is my website. We'll do that at the end of the presentation. But when you're looking for trading opportunities, you really need two things. One are the tools, and two, the process. Because you can have the tool, but if you don't apply it in an efficient, effective way, you can find the trading opportunities too late. Now with position trading, not so important, but certainly with day trading and swing trading, you need some sort of real-time, efficient process so that you can find the trades when they're happening. So I'm really heavily dependent upon computers to do that. I'm looking to identify stocks that are behaving abnormally, and a computer can do that in seconds, what would otherwise take me many hours to do. And of course, if it takes you many hours, then you're too late. Now there's web-based scanners out there, and they're good for those less time-sensitive trades, like position trades, things where you're holding the stock for weeks or months. But for day trades and swing trades, it's important to have some real-time analytical software. So for that, I use TradeStation, which is a well-known software company based in the US. And then I also have a service that I provide called Active Live, which is based on TradeStation. And I'm actually watching that system, Active Live system, during my trading day to identify the stocks that I want to day trade and also swing trade. For position trading, I use stockscores.com. And I will show you that at the end of the presentation when we are looking for some stocks to watch. We'll actually go through the process on Stock Scores to do that. All right, so let's get into this week's analysis. As always, we will start off with the US markets. And the first chart, as always, the short-term 30-day, 60-minute chart. You can see there was a little bit of selling pressure middle to end of the week, this past week. This very short-term upward trend line right there was broken, but the longer term, and by no means long term, but the longer term trend line is still holding. We're simply coming back to that trend line that goes back into January, and the market bounced off of it quite nicely on Friday. So my expectation is we are going to go sideways here in this pattern. The market's essentially waiting to find out what's happening with trade. The reason the market dropped on Thursday is it was learned by investors that we're probably not going to see anything on trade by the March 1st deadline, and that's when some other tariffs kick in. And then the market kind of bounced back a little bit on Friday because investors were told, hey, you know, those tariff things will probably extend the date until those tariffs go into effect. So we'll see how that all plays out, but you can really tell what's important to the market right now, and that is the China-US trade. So looking at the longer term chart, this is the 3-year weekly chart, you can see we had that nice bounce off of very oversold conditions late in December, and we have now come up to the downward trend line, which we are essentially hovering around right now. Talked about that last week, and you can see there this week's candle is something called a doji, where we essentially closed where we opened, and that is a sign of indecision. It often comes at a turning point in the market. And so it wouldn't surprise me that investors get a little impatient about this US-China trade situation, and we see a little bit of a pullback. There's no breakdown yet, but it makes some sense when you rally into resistance, when you're up a lot, that there's going to be some profit taking. We started to see that this week. That could carry into next week. We'll have to keep an eye on that next week. Looking at the Russell 2000, which of course is the US small caps, they had a pretty good run off of the lows as well, but they've been a little more quiet lately. I still think that there's some decent opportunity in the sector. We are seeing those lower price stocks showing some life, but they are fighting through this resistance from November where there was a lengthy sideways trading range. We're back in that range now. So I expect to see this go sideways for a little bit. That doesn't mean individual stocks can't do well, those lower price stocks. But what it does mean is that there will be fewer of them simply because the overall sector is not moving up. All right, on to the Canadian markets. And let's take a look first at the TSX short-term chart. And here we have, again, that upward trend line was broken this week. Now, a break of an upward trend line doesn't mean the party's over. It means that the market's likely just going to go sideways for a little while. And so we should expect that to happen at a minimum, go sideways for a little while. And if we break down through this support zone, we could get a pullback to the next level of support on that short-term chart. So a little bit of reason to be somewhat cautious going into next week. It's not a big breakdown yet, but it is something to keep an eye on. And of course, on the longer-term weekly chart, we don't see any weakness yet. That upward trend line is still intact. We've broken the downward trend line. So I think we probably just go sideways for a little bit, maybe pull back a touch, but I'm not ready to be too bearish on this chart just yet. On to the TSX Venture, which had a little bit of a pullback this week as cannabis stocks, which had a really good rally, saw a little bit of profit taking in some areas, and I think that took a little bit of the enthusiasm out of that market. Plus, the gold sector, which is also big on the TSX Venture, had a little bit of a pullback this week, and really not to be unexpected because this market rallied up to resistance at the downward trend line, touched it almost perfectly, and that means we're going to take some time to try and break through it, and we could simply roll over and head lower again. Watch for a break through that support zone as a danger sign for the small cap Canadian stocks. All right, on to currencies. I always like to take a look at the US dollar and Canadian dollar. US dollar had a nice bounce back this week, and it looks like it wants to try to go up to that level again. I don't know that it's going to happen because we've already had a break of the upward trend line. My concern is that we ultimately make a little bit of a falling top and then come back to retest this low. So this break of the upward trend will not matter if the market can get up to those local highs again. However, if the market falls short of those local highs and rolls over, then we probably have a little more weakness ahead in the US dollar. Canadian dollar had come up to the downward trend line. We've talked about that a number of times, and we can see it here where we rallied up to the downward trend line. Go watch last week's video. I talked about it then. And so not a surprise that we had a little bit of selling pressure in the Canadian dollar. What we need to see now is the formation of a rising bottom. So here's our last low. If we can build a rising bottom low and then ultimately break through that downward trend line, we should see the Canadian dollar start to make a recovery. I think what's critical for that to happen is what happens with oil, because the Canadian dollar has a pretty strong correlation with oil. And of course, with oil being weak, it's hurt the Canadian economy. We need to see that rebound. On to the interest rate discussion. We always look at the Treasury bond market. If this chart's going up, interest rates are going down. And there you see we had an up week for the bond market, and that means interest rates have fallen a little bit, but we have not been able to yet break through that resistance line that we've talked about for a long time. We are building a rising bottom. Looks like a head and shoulders bottom, and we just need the breakout. If we do break out, great, but we got a lot of resistance over here, and so I don't expect a lot of upside to the bond market, which means not a lot of downside to interest rates, but it's looking like we may try and make that breakout soon. Just don't expect a big follow-through trend if that happens. On to commodities. Always like to take a look at oil and gold. First up, the chart of gold. GLD is the ETN, and you can see we've had this nice upward move. This week we took a little bit of a break inside range from the previous week. We are coming up to resistance. I still think we get there in the next few weeks, but once we do, it's going to be hard for the market to break through that ceiling price. So get up there. If you own gold stocks, I'd get aggressive on my exits up there. If you see the market get stuck and start to move down, it could be the short-term end, at least, in the upward trend for gold. On to oil. We've been looking for a little bit of follow-through after the sort of minor breakout from this cup and handle pattern. There wasn't a lot of enthusiasm on that break, so I wasn't too excited about it, and now we have fallen back, probably come into this zone here. We need that show of enthusiasm, a fairly tall candle with some volume breaking out through that short-term resistance to begin the recovery to get back to these levels. And of course, that will help things like the Canadian dollar as well, and of course, energy stocks. Finally, the fear chart, and of course we have a new VIX now, a new ETF, VXXB. It sort of became the one to trade when the VXX stopped trading at the end of January, and really no fear in the market. We had a little blip on Thursday and Friday, but we're still in this downward trend for fear. You can see the falling tops, and we've got some support there. Can't pay too much attention to the long-term pattern because of how these funds are rebalanced, but not a whole lot of concern among investors for the future of the market right now. So my ratings then, neutral on both the Canadian and US markets for the long term. Bullish short term, although they do feel like they're running out of steam here and probably go sideways near term. Gold neutral long term, bullish short term, but that trend is getting a little old. Oil neutral long term. Still got my bullish rating short term as it is trying to break through that cup and handle resistance. You know, stocks have paused their upward move and they have not broken any significant support. So it's sort of a wait and see market, I would say. Investors may be losing their motivation to buy, but not really having a motivation to sell either. Now, most likely, I expect stocks will build a sideways pattern here, but we should be watchful for a break of the upward trend. Oil just is not yet gathered buyer support, and so until it does, until we get a breakout through that resistance level that I showed, don't get too optimistic. And gold is still in an upward trend, but it is pausing, and therefore, you know, build a little base and then maybe make that last stab toward longer term resistance. Fear is relatively low. All right, so now we're going to go on to the stocks to watch, and for this week, rather than just show you the charts, I'm going to show you how I find the charts. We're going to use the Stock Scores Market Scan. So we can jump over to the Market Scan now. Here it is. Now this tool, to use the full version of it anyway, requires that you are a member of Stock Scores, either an investor or active trader member. So this week we're going to run a scan that I do a lot called the abnormal break scan. Now we're going to focus on the US. I ran it on the Canadian market earlier and I didn't find anything. So we're going to run this just on the US market. What this scan does is it goes through every stock that trades in the United States, and it looks for stocks that have had an abnormal day up, that are breaking some resistance, a few other filters. I'm then going to just click on Run Market Scan. It went through the entire US market and it found, as you can see here, 42 stocks that met those criteria. So our next job is to look at those charts. Now we can do that in two ways. We can use the gallery view or the slideshow view. The gallery view looks at 10 charts at a time, and the slideshow looks at one chart at a time, but in a larger version. I'm going to run the gallery view just in the interest of time so it doesn't take too long. So we click on Go, and I can then scroll through the charts, and when I see something that I think is interesting, I can blow it up. So for example, in this stock, this is MARA, it is in a downward trend, but on Friday it broke that downward trend. You can see the volume a little stronger. That's pretty good. Now it's going to probably find some resistance there, so the upside isn't considerable. For that reason, I would rate this one a 6 out of 10. So we can just continue along. Again, scrolling through the charts. When I see something I like, I click on it and we can start to analyze it. So Riot blockchain, of course, related to cryptocurrencies and that sort of thing. What I like about it is the pattern. We had a long downward trend there. The downward trend was broken. We've been building some rising bottoms, and then on Friday we made that breakout through short-term resistance. Now this is a pattern that I call a bottom fishing pattern. It's 3 stages: break the downward trend, build a rising bottom, and then break from a rising bottom. We've got good volume support. I like this chart. I would give this a 7 out of 10. Moving along, we won't go through all 42, but we'll go through a few until we've got a couple of good ones here. This one looks interesting. Forum Energy Technologies. I have no idea what they do, but what I do know is that some group of investors found a good reason to buy on Friday, traded 4 million shares, breaking out from a similar pattern to Riot blockchain, where it's breaking from a rising bottom after a break of a downward trend line. It's a little bit different downward trend line on this one because really the downward trend is like this, and then we had a steeper one here. So we've broken that one. Our next level of resistance is up there. That's decent upside. You know, this stock closed at $5.84 on Friday. I would say upside is into the $8 to $9 range. So I think there's enough upside to justify the risk. This is like between a 6 and a 7. Let's call it a 6.52 rating. I'm being a little bit facetious, of course, but it's a good chart, not an outstanding one, but pretty good. Let's see if we can find one more here. I don't know if there will be any more. Cody, that looks pretty interesting. So COTY is actually a stock that we picked up in the active live service on Stock Scores about a week ago, I would say. I think it was January 31st. And the reason we found it on that day was because it did some abnormal trading that day. You can see the abnormal volume, the abnormal price action. Well, today their earnings announcement came out. Earnings were good. The stock made a pretty good gap to the upside. So that's kind of the second buy signal. Really, the first one was back on January 31st. The issue now is that it's going to come into this downward trend line around about $10.5. It's going to find some resistance. So I don't love it for an initiation of a position here. If you own it, I think it's a good hold, but I think it's probably going to get stuck in around 10.5, and then we'll see from there, but it'll take some time. So that's how I look for trading opportunities using stockscores.com. Let's go back to our trade of the week. This week I am showing a day trade that came up on Friday using the Active Live system and the Stock Scores Action Candle Indicator. We talk about this every week, but for those that are new, I'll just highlight it. There's a little pink dot right there. That is the Stock Scores Action Candle. And I've got a process that runs every 2 minutes looking for any stock in the US market that makes that action candle. And the reason we look for them is they tend to predict strong upward trends. So in this case, it highlighted PTLA at around about 12:15 Eastern Time at $28.31. So if we use our risk profile of a $100 risk tolerance, that meant a position of 900 shares, pretty large position, $25,000 position, but keep in mind that with 3-to-1 margin, you're really using about $8,500 to take that trade. The sell signal on this one, we don't often talk about sell signals, but we use these RR lines for sell signals. And this one had a sell signal right there at 8 RR. And so if we factor in commissions and slippage, we'll call that a 7.8 RR, which means a $780 profit, which was a 9.1% return on the capital required, and a hold period of about 2 hours. And the nice thing about this one, the reason I wanted to highlight it, is that sell signal was a good one because look what the stock did into the close. It went pretty sharply down and gave back most of its gains, finishing the day at 2 RR. Well, that has been the Stock Scores Market Minutes for February 11th, 2019. I hope that you've enjoyed it. Have a great week in the market. Subscribe to the channel, click the like button, all that stuff that we're always supposed to say. Have a great week in the market. Trade well.